We're just waiting to start our next session, Shareholder Management and Effective Communications. And I'm just waiting for my co-host, Jason Futko.
Am I here?
You are here.
I'm here. Sorry, it took me a minute.
We're loving technology when it's working. We're not liking it so much when it has a couple of glitches. So
I've done lots of these with the other technology, but this is new for us. So still getting used to it.
Yeah, it's a new platform for us. So forgiving to the audience that might be wondering what's going on with some of the glitches, but we think it's a great platform. It's just, hey, it's technology, and working remotely, these things can happen occasionally. So.
Very true.
So Jason, shareholder management, effective communications, what are we talking about?
It's a great topic, actually. One that probably doesn't get enough attention because it's outside of the need to do stuff. When you're doing a fundraise and you're managing your business, you're always focused on what's the next hurdle. Okay, I got to get my lawyers involved because I got to do a fundraise. So what do I need to do a Reg A or Reg CF? Need to get my lawyers, need to get a broker dealer, need to get an escrow agent, need to get that transfer agent. And you're thinking about all the things that you have to do, but people tend to overlook the most basic of activities that I would say are things that they should be looking at on an ongoing basis and to incorporate into their current practices. And private companies typically don't look at it because they think to themselves, oh, they pigeon it as investor relations and push it off into that's a public company thing. With Reg A Plus and Reg CF, now you've got large shareholder bases. So you're starting to get a big need for companies to start communicating effectively, making sure they're doing it within, the regulatory framework. And, you want to do it in a way that, kind of tilts it to your advantage too, right? I mean, you don't want to just, okay, I have to, it's the end of the quarter, or it's the end of the year. I got to put out a release to my shareholders, got to get them off my back. They're all hounding me for information. That's kind of the opposite approach.
And and it should never be like that. I mean, we look at issuers that are going on. You're not raising, this is an investment journey. Most companies, they're not raising capital once, twice, two. Having been an entrepreneur, having raised capital, having realized you never raised enough, things happen. I mean, all the businesses that said I raised capital for COVID, what are you going to do with all of those employees when you have to shut the door because you have nothing coming in? You still need the capital. You don't want them to leave, but at the same time, those employees, you're going to be paying for them. You don't know when it ends, or things happening in a variety of different spaces. And the franchise conversations that were going on today, and I learned a lot. There was things that, if I'm going to do a large construction project, that's going to take a certain amount of time. But that time might be affected by things like weather, might be affected by supply chain, could be affected by a lot of variables. At the end of the day, it's not one raise at a time, it's multiple raises. And I think shareholder communications needs to touch at pre-raise. What's we heard earlier in the day, how are you communicating with that potential investor? And the marketing and the rules and the guidelines and the laws associated with it, while they're not overly complex, you need to be aware of them to be effective. We're seeing companies out there raising significant amount of capital, especially with the Reg A Plus or Reg A. Sarah, we keep bouncing on Reg A Plus. But it's $75 million, and we're seeing companies raising, those kinds of dollars amounts today. But in doing so, it's not just raise the money and stop the communication. So from a pre-standpoint, Jason, what are your thoughts, or what are some of the experiences that you've seen?
And I'm going to jump back just a little bit, Peter, because we jumped right into this. I'm Jason Futko, the co-founder of CoreConnex. I'm just going to give you a little intro. I spent over a dozen years doing corporate finance and investment banking, helping private companies raise capital prior to this role at CoreConnex. And I know, Peter, you've got a capital raising on your picture here, but you're also a pretty experienced salesperson. So that, I want to explain how that ties in a minute as well. But in terms of the shareholder communications or shareholder management, which incorporates not just shareholder communication, but everything to do with that shareholder management. So that's communications, that's what has traditionally been broken down into investor relations, public relations, shareholder meetings or corporate secretarial services. It kind of gets mixed together a little bit in the private world because you probably don't have the same definition of roles anyways in a private company. So you've got a lot more that gets sort of pinned onto this role. And if you can find a good person that can manage all of that stuff and connect with and prep, do the prep work and coordinate with the other groups of the organization, such as marketing, sales, finance, because obviously these things play a role in what you're communicating. It's very important. But back to your question, the pre-raise, if you're breaking it down into pre, during, and post a fundraise, although shareholder management is a continuous function, you could almost say it's pre, during, post, and then repeat, right? So in the pre, you're going to be conscious of making sure that when you pick your partners in your fundraising efforts, that you're picking ones that you can work with. You want to make sure, particularly from the shareholder management perspective, you want to pick your investor acquisition firm, marketing firms, those sorts of people, and you want to deal with them directly. You want to be able to make sure that the messaging that they put out and that they're going with in that direction is consistent with the messaging that you're going to be putting out in the shareholder management and communication role. So, from a preparatory role, you want to make sure that you're involved in that activity. And of course, you're going to want to make sure that the messaging is key and that you're starting to reach out to not just your existing shareholders, but any potential shareholders. And most private companies know they've been talking to people probably since they started or before they had the idea about investing in their company. So those people that they've been sort of keeping warm and on the back burner in terms of, we want to go out and do a fundraise, but we're not there yet. They want to have a good list of those people to go out and to approach. And messaging to those people should be, hey, we're going to be doing a fundraising. We'd like your support, because the more support you get prior to the fundraise, and every crowdfunding platform and broker dealer and alike will tell you, the more momentum you bring into your fundraise of people that you've been talking to in the past, whether they're potential partners, customers, or potential investors, helps you get through that crowdfunding raise quicker and with more success. So if you're taking that leading role and discussing those key things and highlighting the fundraise to these people prior to you doing an active fundraise, you're going to bring that momentum to the table as well.
Yeah. So what I'm hearing and what we've seen with lots of discussions with clients and those raising through crowdfunding in general, you have different types of investors. I mean, right out of the gate, you've got 285 million people that are potential investors, but you need to narrow that down and do that discovery early on. Are they customers of yours? Are they colleagues of yours? If you're whatever industry you may be in, are they impact investors? Those are all different core constituents.
Yeah, of course. These are all questions you're going to ask. And when you're trying to assess your target market, and you'll go through this with your investor acquisition firm, there's going to be a target market that you're approaching with this, with your potential offering. Of course, customers are always a good source. And if you flip that on its head, existing shareholders are essentially your best customers, right? And you know this, and I'll let you get into a little bit of this brand ambassador stuff. I mean, as a salesperson, who better to promote your product than people who have bought into you and your company and so forth. So that really carries a lot of momentum, right?
Yeah, 100%. I think we miss. I mean, if we look at the history of capital raises, hey, the qualifiers were you have money. You may not care about me. You may have no vested interest in what I do. You might like the idea, and at the end of the day, are you going to get a return on your investment? With the crowdfunding perspective, as companies try to identify their audience, they have to think that and recognize that. Probably the best example was put. I had the luxury of sitting at a MedTech summit last week, and it was amazing. It was truly amazing. Here you've got a whole bunch of serial entrepreneurs and doctors and scientists and biomedical people and physicians. And this goes to any industry, by the way. But I mentioned it just because what the salient point was, these doctors were going, I've got this idea, and they're pitching it, and they've got traditional financiers there and institutional investors and banks there. And I said, well, do you know much about this crowdfunding? And the response was, yeah, I'm learning really more about it. Once they engage and they learn about it, they go, you know what? All of my nurses for 10 years have been asking, how do I invest in the things that you do? How do I invest in your companies? And so these are key constituents that they want to invest. And now the entrepreneur, not only can they control their company, but they also have the ability from a communications perspective to talk to these individuals. And those individuals talk to other individuals. When you look at, we're talking about whether it's a brand ambassador that's going to tell your story because they happen to like the franchise that you're with. But there's also impact investors in the crowdfunding space. And those impact investors are individuals that say, you know, that touched my heart somewhere. I'm investing with my heart as much as I'm investing with my wallet. And it might have affected their lives. A lot of those investments are really, we talk about the franchise space where you might be building a building and it might be 2 to 3 years from start to finish and get everything off the ground, from the financing to the outreach, et cetera. But when you're dealing in some sectors, it's going to take you 10 years before you get a product to even market. So you're going to be doing multiple raises. So all of this is about, you know, whether you're putting a shovel in the ground, is communicating with those investors. And if you're communicating with those investors today, you better be communicating with them, you know, along that journey, because they're going to reinvest. And after that, after the close of that investment, that's where, you know, the small piece of this is the historical public markets, where you said, oh, the IR firm, that's what they do. This is a different scenario here. This is, I want to be talking to my investors at all different stages. And I also want to communicate with them good and the bad news, because all of us, if we get some bad news occasionally, hey, I want to know. The worst scenario is, I don't know what's going on with the company. I don't know what's going on, you know, specifically to the news around it. So we have the technology today. I mean, the internet opened up the doors completely for that. So we can reach out to a wider audience, and we have to do it we have to do it during, and we have to do it post. And it's that constant communication. And it can be done so cost effectively today because of the communication tools that exist. When you're doing things like on a platform, people, you know, and we talk about things like cap tables in the earlier session, where the issuer is going in and looking at their cap table. And one of the questions here was, you know, how do you bring stakeholders together? Well, the stakeholder is the issuer, and the issuer is looking at the cap table, see what's going on with his shareholders, but he or she also wants to reach out to the shareholders. So some platforms help facilitate.
They're already connected, right? They're already connected on the platform to their shareholders. Why not manage it the same way, right? So you're right. There is a way of doing it. Technology's there. You mentioned brand ambassadors, and just so everybody understands, when he says brand ambassador, you know, we're talking about investors and empowering your investors. We're at a point now where, if you provide enough communication, these are investors who believe in you, they believe in your story enough to buy into your company. Hence, they believe in your product. So they're probably recommending it to other people. They probably can help you open doors that you probably didn't even know existed from a perspective of partnerships or other things like that. So always keep in mind that empowering your investors to help you in your business sense is great. And of course, back to Peter's point, good news, bad news, doesn't matter. Tell them. You know, the worst thing you can do is go through a hard time. You know, we just went through COVID, for example. I mean, there's a lot of businesses that struggled and some that didn't make it. And it's unfortunate, but at the same time, the more you communicate with your investors and let them know the situation you're in, the more they're able to help. I mean, a lot of these people have extra money to invest because they've been successful in one thing or another. And maybe that is something that you can draw on moving forward. And whether it's, you know, accessing somebody that's in charge of financing at a bank, whether it's in charge of accessing other investors because they've got a high net worth investment club that they, you know, frequent, or whatever the case is, empowering those people to help you in your business is critical at all stages. That's pre, during, post. But, you know, obviously you're going to have more investors each time you fundraise. So the post is going to be the juicier part of each fundraise, because you're going to have that new allocation of investors that you have to manage and communicate with and keep on top of. So when you do that, obviously, again, when it flips back into pre your next round, you've got that big, larger shareholder base that you can start prepping for that next round of financing as well.
There was a note, a comment just being made in it. I mean, we're talking about small investors, we're talking about large investors, we're talking about all kinds of investors in the community. But in the franchise space, for example, those investors may be vetting, you know, they're vetting the offering of that new franchise and that franchisor. That vetting itself may open the doors for that investor to go, hey, the crowd really is loving this deal. I want to actually buy a franchise, not just invest in someone else's franchise. So it comes from multiple flavors as well. So when we start to,
of course, well, think about the nature of the type of investor that you're reaching out to here in crowdfunding, right? A crowdfunding investor is not a typical accredited investor. Accredited investors have been seeing private deals for years. When you talk about the accredited investor, you're talking about people who traditionally haven't had access to these quality types of deals at this stage. It's something they've been excited about, and that's why the Jobs Act sort of has given them the access, but they've never had it. So their mentality is, okay, what can I invest in? I can invest in real estate, or I can go into, you know, my bank. They've got a bunch of products, or I can go to the stock exchange and I can invest in McDonald's or whatever it is. And they know the brand, they recognize the brand, they invest in that brand, they can buy in and out. So you got to remember that mentality when you're talking about crowdfunding investors. They're not the traditional buy and hold long-term investors that you would see in the accredited space. So you got to think about these things when you're trying to talk to them. And of course, franchise makes perfect sense. You're right. If you've got a handful of franchises, people are already identifying with a brand. They may not be buying the corporate. Maybe they're buying a franchise package. But the point is, they still identify with the brand. So you know it provides you some great leverage that you wouldn't have had. It's the same thing when you get into people who are in media or telecom. They already have a huge not crowdfunding, social media following. Sorry.
Sure.
You know, and those social media following really help them drive to their crowdfunding campaigns. So whatever you can do in the planning and running of your crowdfunding campaign to drive that traffic, whether it's utilizing your brands that you're associated with, utilizing your partners that you lean on because they've got great experience. You know, a lot of people like to mention contracts. I got a great Costco contract, and you know, we just need to ramp up to get to it. Whatever it is you're using as your means of getting to the financing, those are the things you're going to lean on.
Well, that comes back down to when we talk about brand evangelists. They love your brand. They love your story. They're going to share it. They're sitting over coffee. Hey, I just invested in particular company. It's that influencer. And the influencer communication. I'm just looking at a note here. There, comment in it. They are influencers. And one of the things from a communications perspective, and this goes a little bit on the marketing. I mean, we're talking a little bit about the communication in general, and some of us were thinking about posts, but the communication that's facilitated by Reg A and Reg CF in part is the ability to incentivize your investors. It's unheard of. Some of the most successful raises that we're seeing are raises that are doing multiple raises. They're incentivizing the investors, then bringing the investor on that journey and saying, hey, my shares at this raise was $5 a share. Their next raise is $15 a share. It's like an IPO. They're buying the story. And the story is real, because who's to say that this isn't the next big thing? As Sarah says, don't ask me to tell you what the winners and losers are going to be. We've seen some monster billion-dollar companies that did it through the crowd, and no accredited investor, no VC were going to touch them. After they're successful, the institutions want to get in, but it's because of how they communicated with their investors, their customers, their audiences. It's telling the story. You're not selling the stock; you're telling the story. So it is like you're buying pre-IPOs with a Reg A, with the Reg A offering. The ability to trade those shares in the future is part of the communication. You still need a market. You still need a buyer and seller. So we're not going to, hey, who's going to buy my shares today? The fact of the matter is, the vehicle and the exemptions are set up for that. The regulation is set up for that. So you have some liquidity. We won't get into that too much right now because there's a lot of different directions. But at the end of the day, it allows those shareholders to get in and out at a point that was really difficult with pre-regulations. Again, I've got these share certificates in my drawer as I look back down there, and I don't even know where these companies are. So that was enclosed. Maybe, who knows, your shareholders can help you thrive to the net, going through a tough time. They may be your backers and support you because you're an inch away from success. It's all about the communication.
That's right. I think we'd be amiss if we didn't mention quickly the compliance side. Obviously, shareholder management is key, and you want to be able to communicate, particularly in the franchise space where, as mentioned in the legal panels, et cetera, you have to be a little bit careful in terms of what you can release and what you can't release based on your franchise contracts. So again, like any business, but particularly franchise, you want to just be careful what you say, how you say it, how you put it out there. Don't tell people it's going to be a multi-billion-dollar company. Don't make outlandish accusations, or not accusations. Claims. Yeah, exactly. And just make sure that you are on side from a compliance standpoint when you're going through this. There are external people that do this role. It is beneficial to talk to them if you have no idea how to do this yourself. And there are other components of it, running your AGM. Ask your transfer agent. They understand running AGMs and how important it is every year to make sure your shareholders vote if they have voting shares, and finding ways to enable that, in an efficient way. There are e-voting platforms, et cetera. So those are the kinds of things you're going to want to be careful of as well. I don't want to put a damper on the discussion.
But I think you can be as enthusiastic, as passionate. You can tell your message using multimedia tools, and you can be compliant at the same time.
Exactly.
But one closing note on caution: just because you saw it on the web and you saw somebody else doing it, doesn't mean it was right. Doesn't mean it followed the rules and the guidelines and compliance. We see it a lot. I wouldn't say a lot, but we see it enough that just do it right. The rules and regulations were meant there to provide, to really democratize capital, and you can do it right. And if you're doing it wrong, you're just you're gonna hurt everybody else in the space. I mean, at the end of the day. But again, so yeah, it takes a team. In the earlier sessions, you got to talk to your lawyers. You got to talk to the broker dealers. You got to talk to the platform providers. Talk to companies that have done it, successfully, and look at cases that didn't work out, because it's a journey. But I firmly believe this isn't getting smaller. This is getting much bigger. So we're all advocates of the regulations, the rules, compliance, doing it right, using the right partners, and moving forward. And the investors are out there, the market's out there, they want to do this. So it's fun. I mean, hearing the stories and providing the opportunities for some of these entrepreneurs, it's amazing. It's the best part of the job by far, by far.
It certainly is. It certainly is. I think we're out of time here. So
I think we're out of time. And on that note, I think we all want to thank all the people that put this together from this session anyway. And yeah, it was a great event that I think that the franchising team put it together. We're just a small part of our jumping in here and talking about what we do. So I want to thank everybody for that.
Thanks so much.